the earnings that came out yesterday. First up, we had Infosys, which reported a better than expected Q3 results. IT majors revenue grew 20% year on year. PAT increased 10.5% on a year-on-year basis, while the margins missed the expectations slightly. More surprisingly, and one which the street will cheer, is that they revised their Q4 guidance upwards. Now let's listen in to what their management had to say.
In terms of what we see in the environment, we are not commenting obviously on the financial year 24 and what the guidance or growth in that year will look like. What we do see in terms of demand environment is what I shared earlier. We see some areas, for example, the mortgages area or the investment banking area and financial services. We see some areas in telco and high tech and some in retail. There is more variation. We see in the European markets more concerns on what's going on with the economy. The US market is also there, but relatively less so in the US with respect to Europe. We will see how this plays out, because this is not a scenario where it's the same for every industry. For example, we've seen extremely strong growth in energy, utilities, that part of our business, and we continue to see that in Q3. We saw very strong growth in manufacturing, and we continue to see some of that traction in our business in Q3.
Well, I also have with us Anisha Jain, who obviously tracks IT for us, to take us through and give us a breakdown of those numbers. Anisha.
Well, it was a solid showing from Infosys all around. If you look at the constant currency growth, that came in at 2.3%, much better than our expectation of 1.2%. And that's the reason the company has actually upgraded their guidance for FY23 to 16 to 16.5% now. Earlier, this number, what they were expecting was between 15 to 16%. Though as far as the EBIT margin is concerned, they have maintained their guidance at 21 to 22%. Let me talk about the Q3 numbers then. Solid beat not only on the top line, but if you look at the other internals in terms of deal wins as well as attrition, it's a solid show there, because the attrition has come down meaningfully this time around. From 27.1%, it's down all the way to 24.3%. And also if you look at the deal wins, it was a solid show of $3.3 billion this quarter, which is the highest that we have seen over the last 8 quarters. Remember, the street was actually expecting a number of anywhere between $2 to $2.5 billion, and this is much better than expectation. Even if you look at the margin performance, yes, it's lower than what we were expecting, because we had penciled in a number of around 21.9%, but 21.5% will be taken well by the street, given that the strong top line has meant that there is a beat on the profit level as well. The profit figure came in at 6,586 crore versus the expected 6,550 crore. So a solid show coming in from Infosys all around, whether deal wins, whether attrition, as well as top line, solid show.